Davis.
And I'm Dylan Tanaka.
We're making millions over morning coffee. Well, as you know, Tuesdays are all about passive real estate investment, which means hands-off real estate investing for building maximum wealth. And today, we're hoping that you can help us settle a little argument that we've been having here in the office. It's gotten pretty heated. We're going to put the gloves on pretty soon if you can't help us out. So please do so, because I don't want to have to pound this guy. Anyway, we're talking about dealing with private lenders. As a real estate investor, we use exclusively private investment capital to buy and sell our houses. And we're talking about whether or not making regular payments and paying, say, 10 or 11% interest to a private lender, or letting that interest accrue and paying that lender out when you sell a house. So that's what we hope you can settle for us today, because my opinion is that it's better to make payments to your lenders because you're ultimately paying a lower interest rate and you're making your lenders happy by putting cash in their pocket every month, plain and simple.
Well, the question that raises when Adam says that to me is, are you the type of person that wants to escrow your taxes also and let the government use them to make money and make interest off your money? Because this is what we do with what I prefer to do with private lenders. We borrow the money and we let the payments accrue and pay it out in the back end. The reason for that is it gives us more capital monthly to invest with.
You have to consider your overall cost of capital when running a business, though. I mean, you got to ask yourself, am I going to pay, at the end of my day, what's my bottom line look like? And yeah, there is a cash flow consideration there, but if you're borrowing your money right and getting your deals right, then that shouldn't be much of a consideration. If you're talking about saving yourself $10,000, $20,000, $30,000 over the course of a year and the amount of points and interest you're paying your private investors, then hey, it's a no-brainer for me that you make those on-time payments, make it a regular occurrence. Hey, it's a cost of doing business anyway. Might as well put those suckers on autopilot and just start doing more deals.
Well, in a perfect world, I think Adam's right. The difference is we don't know what's happening with this market. And in my opinion, I think that the faster you're buying houses right now in Metro Detroit, the better. And the more capital that I have in my bank account or my company's checking account that's going to allow me to buy more houses, the better for me. I do agree with Adam, long term you definitely want to make payments. That's why mortgages are set up that way. But in the short term here, right now in Michigan, I want as much capital as I can have to keep buying right away.
Dylan brings up a great point. You do need as much capital as you want, buying. And you want to know a surefire way to get more? Start making your lenders happier. A lot of lenders don't understand accrual as much as they do simple interest. So when you're working with private lenders and you're saying, hey, I'm going to pay you all this interest later, that's a bigger risk for them. And sometimes a bigger risk for your private lenders isn't necessarily mitigated by a 2 or 3% increase in the annual interest rate they're going to get. Now, if you start paying out regular interest payments on the amount of money that you borrow, it builds a lot of faith. And hey, maybe accrual will be right. Maybe your lender's going to want you to accrue at some point in time. But you never know until you start making on-time payments and start building a trust up, and then that you are going to start making good on it. And even if it's an old lender relationship, hey, you need to still show them how important they are to you and how important their monthly cash flow is to your business, because it is a partnership after all.
Well, Adam's half right and I'm half right, because the real answer is in your lender's heart. Whatever your lender wants you to do, you pretty much have to do. As far as making payments, we have some lenders that would prefer for us to make payments, and we have some that would prefer for it to accrue. But I'm just saying, as of right now in Michigan, the more cash you have available to you, the more houses you buy, the better off you may be. But Adam's right. A lot of times lenders want to lessen their risk, and the more interest payments they get is the less money they're out in case something bad does happen, like a foreclosure. Because face it does happen with investors and private lenders. But you need to look into your private lender's finances, sit down with them, be very diligent and serious about this, and figure out what's going to be right for them.
That's right. You always have to treat your lender as if they were a partner. Even if they're not a profit-sharing partner in your business, you have to treat them as though they were, because they're vital to your success and your survival, no matter what the market is. Because this foreclosure market probably is going to go away in the near future. We don't know exactly when that's going to be. But when the market changes and you need more capital because price points are going up, you're going to need these lender relationships. So start taking care of them now. But Dylan's right about the amount of trust that you have to build and the extra risk that private lender is taking on you. So even if it is an old lender relationship or a new lender relationship, I'm of the opinion payments are always better. It's a way to put your business on autopilot. It's less to manage in the long term if you start paying those out now instead of letting them stack up. But really, well, we need your input on this. We need you guys to email us send us an email at info@mirealestate.tv and let us know what you think about it. Let us know what you do in your business. We're welcome to other opinions to help us settle this matter internally. I don't know if we're going to put this to bed once and for all, because one of my great mentors told me, if you ever have two partners in business that agree with each other all the time, better fire one of them. So check back with us every day. If you want to know more about me, you can go to my blog at www.adamjdavis.com.
You can check me out at www.dylantanaka.com.
And make sure you tune in tomorrow as we help you make millions over morning coffee.